All right, the lead article in the weekend Wall Street Journal edition, quote unquote, economists are cutting back their recession expectations. Blah, blah, blah. Forecasters still expect GDP eventually to contract, but later and by less. Of course, eventually could be a long time. I don't know if anybody ever met eventually. You never know when she's going to pop up. Joining us now to talk about it, we have two aces, Jason Trennert, Chairman and CEO of Strategic Securities, and David Malpass, former president of the World Bank Group. Are you recovering now, post-World Bank? You look very well.
I am having a good summer.
You always look very well. Good. And the great Adele's doing fine?
Good. Thank you.
All right, Jason Trennert, before we get to the recession and this woman eventually that they keep talking about, I am interested in how well the stock market has done of late. The S&P 500 is closing in, I think somebody told me it's 6% below its all-time high, which is interesting. The all-time high was 47.96. We are at the close today, 45.22. I'm pretending that we're actually a business show, but I'm interested in this point of view because almost nobody thought that was going to happen.
No, and I think it's also more surprising given the fact that corporate profits, according to the S&P, peaked 2 quarters ago. According to the NIPA, profits peaked 3 quarters ago. And so the entire move in the stock market, there's two things I would say is, one is it's all been due to multiple expansion. And secondly, a good portion of it, the vast majority of it, has happened after Silicon Valley Bank failed. And so, in my opinion, it was a combination of, at least partly, a combination of an end to quantitative tightening and the fact that the Fed increased the size of its balance sheet by $300 billion.
That isn't actually true on net now.
Not now. But for 3 weeks you increased by $300 billion, and then the Treasury General Account also fell.
Oh, you're saying that they were injecting money. That's
so between
good for
between the two of them,
you
actually had a double whammy, which increased liquidity pretty substantially because you were flat year to date on the S&P 500 in early March. So a good portion of this move has happened just in the last 3 months. I don't want to poo-poo it because the economy's done better than we had expected, but by the same token...
And stocks have.
But
not just you, almost everybody on the planet.
And I would also say, though, that earnings have gone the other way. So
you're skeptical?
I'm skeptical because I haven't seen anything that convinces me that corporate profits are about to reaccelerate.
All right.
I think margins are still under pressure.
David Malpass, you're a quintessential growth guy. I guess the first question is on this Wall Street Journal survey. Now, they're still predicting a recession, but they keep putting it off. Do you think a recession can be avoided? Can we have a soft landing? And then I want to add, since former head of the World Bank, and a very distinguished job you did indeed, another headline this morning's Wall Street Journal, though, says the global economy looks very, very soft. So America better, but the global worse. I don't know if that jives in your view.
I think it does, and it's possible to do that. The U.S. can prop up growth with government spending. We're running this giant fiscal deficit. So remember, government procurement is counted directly in GDP. So you get some papering over of weakness in certain parts of the economy from that. And we also have 3.8% bond yields on the 10-year, which has to be factored into what the S&P is looking at. In effect, you've got a Federal Reserve put that is standing there. If something did go wrong in financial markets in the U.S., as we saw with SVB, the government would ride to the rescue and add it to the national debt. So over and over again, investors look at it and say, golly, there's not much downside because the government's always there with apparently unlimited borrowing power. Look at the 3.8% growth. Whereas outside the U.S., that
3.8% bond.
I'm sorry, 3.8% bond.
Right.
Outside the U.S., they don't have that.
So can I just ask you quickly? I want you to weigh in too, but people, the Atlanta Fed GDP Now tracker is a little bit above 2. So people are talking about great growth, 2%. No, it's not. You know, great growth in the context of the slump of the last 25 years, except for some brief moments in the Trump administration, we should be growing at 4, 5, and 6%. 2% growth is a failure. In fact, 2% growth and 3 or 4.8% core inflation, that's a lot. I mean, I'm not happy with that. We should beat that.
Right, and the country should be preparing for the aging of the population. So you need more growth. You need to get farther ahead, both in terms of GDP, but also in terms of savings, in order to be preparing for aging. And it's just not there. And big problem is rest of the world is in worse shape. Jason,
What should investors do? You have, listening to you, and you're the award-winning guy in Wall Street, no question. This is a rogue rally. That's how I'm going to put it.
Yeah, it's a little bit of a rogue rally.
Kudlow highlighting.
Right.
It's a rogue rally. It shouldn't have happened, but it did happen. Should investors stay in the market now, or what?
I think they should be focused on companies. It sounds simple, but I think they should be focused on companies that aren't reliant on the kindness of strangers for capital, which is to say companies that have cash flow, that have profits. Because I do think, my own opinion is that inflation is going to be sticky. And I also think that the Fed put, so-called Fed put, is not going to be as reliable, perhaps, as it was in the past, because inflation is going to be higher.
You think they're going to keep raising their target rate?
I think they're going to have to. I mean, last week was a great week in many ways for risk assets, and yet banks were down on Friday. And so, in my opinion, the Fed has to be looking.
No, the big banks are up.
Big banks were actually, they had a reversal intraday, and KBW Nasdaq Bank Index is down 17% year to date. It's hard to get really excited about a market when the financials are not participating.
Got to jump out. Thank you, gentlemen. David Malpass and Jason Trennert, welcome back.